Hi, it's John, and I'm very pleased to be joined today by Caribou Honig. He is the partner of SemperVirens Venture Capital, as well as the creator of a number of interesting things we're going to talk about today.
I'm doing great. Thanks for having me here today, John.
It's a real pleasure. I wanted to get started just quickly by taking a couple of minutes to introduce what you're doing throughout your career, because you've had a couple of interesting phases and you've been the creator of a number of things that people might be familiar with. Can you start by giving us a bit of your background?
Yeah, I'd be happy to. So, I'm kind of on my third act, I like to think. So, I started out my career at Capital One back when it was a much smaller company than it is today, probably 1,200 employees when I started in 1996. Really cut my teeth on how to use data in a business strategy. And, of course, Capital One is excellent at that. Had a good 10-year run of it, left there in 2006 when there were probably 20,000 employees. Took a year off, watched Netflix, played with my kids, listened to the universe, all that good stuff. Reconnected with a couple other former Capital One executives, and we created a boutique venture capital firm called QED Investors, very active in FinTech, among other categories. Did that for a number of years. As we grew, we started to specialize a bit more at the individual partner level. So around 2015, I started to focus on the InsurTech category, which was just emerging as a thing at that point. I was looking for a good industry conference to attend that would bring together the other investors, the entrepreneurs, the innovation executives from the insurance industry. Couldn't find one, and probably one of my best moments of insight. Realized maybe I should just go ahead and try to create this conference since I needed it to exist. Luckily, got connected to a guy who knew what he was actually doing there, and ended up co-founding the world's largest InsurTech conference, InsurTech Connect. That led to my realizing I had a few other itches I wanted to scratch outside the scope of QED. So around 2017, just a few years ago, I left QED. Now, as I say, doing my third act, which includes helping to grow some more conferences. Actually became a general partner in another VC firm very focused on future of work kind of investments called SemperVirens. And besides that, joined a few InsurTech startups as an independent board director and instance of myself. That's my main thing.
Great. And I guess a question to begin with is, why was it FinTech that you wanted to continue to work on? That's been a real theme. I mean, I know you started at Capital One and it's become a hot area, but why was FinTech something that you really wanted to continue to focus your career on with what you were doing?
Yeah, well, it's funny. First off, there's the debate: is InsurTech part of FinTech or not? I'm agnostic enough on that. InsurTech is certainly an interesting category, with a lot of the same questions as in like the banking part of FinTech, but also different answers to those questions. I think fundamentally what's appealing here is it's the opportunity to transform industries. I mean, that's professionally what I like in terms of my impact is if I can help transform an industry in playing some little role there, that's exciting. FinTech, InsurTech, these are very data-rich, data-driven categories as well. Back in college, I was a physics major, and so there's some categories of business, and areas like FinTech is one of them, where you can apply some of the same training and mindset of something like physics into the business world and have it really be useful.
Interesting to learn. I didn't know that was your background. It's not my background, but studying the CFA and a number of the, let's say, formulas and risk management tools that have come from physics into the financial world, I've definitely see that's something that you can draw a lot of inspiration from.
Well, I'm not saying I was terribly good at it. There's a reason that I stopped physics after the bachelor's degree in FinTech. But it was good training, at least, even if I wasn't terribly good at it.
Well, I wondered, do you see that as being, when you talk about industry change and when you look at the levels of what you're doing with your work, whether it's at the startup level or the venture capital level or organizing, thought leadership through conferences, do you see there being a dynamic in how you've pieced that together and how you do achieve your goal of changing industries?
Well, that's a big question. I appreciate the question. I actually think that partly by nature and partly by my training, I tend to be a little bit of, coming out of left field at things, right? And so I think that the training from physics I think that the sort of looking at problems from a very first principles kind of approach. I mean, so physics is the first principles kind of science, and actually my sort of co-degree in undergrad was philosophy, which is the sort of first principles of humanities. So I think that, you know, looking at questions, at problems from a first principles approach opens the door to maybe some novel ideas, some novel solution types. And then, you know, besides that, you know, I'm just a little bit of a goofball in terms of my mental processes. So I think that tends to also give rise to new ideas, different ways of looking at things, often wrong, right? I am plenty often correct. Lots of my harebrained ideas are stupid. Occasionally I have a harebrained idea that's actually, you know, pretty clever, pretty insightful. And, you know, I'm pretty good at finding people I get to work with who really help filter, oh, that's a dumb idea, Caribou, or, oh, that's actually pretty insightful. Let's pull on that thread. Right? Maybe really my talent is that I get to work with people who they make me better, and maybe I can make them a little better too.
Interesting. Well, actually, it's funny to hear that. I studied philosophy in undergraduate, and find it interesting times now when in the innovation space we're piecing together, first principles of the physical world and the first principles of humanity. So something we can talk further about. I wondered before we move on to some of what you're doing these days and the change that's going on in the world. In your career thus far in fintech, are there particular portfolio companies or companies that you missed out on that you're particularly fond of or like to talk about?
Yeah. So one of my favorites, and this is from my QED days, is a company called Remitly, which is in the cross-border money remit space. And they are doing amazingly well. It's been interesting seeing from a little bit from afar, but I've heard that COVID has actually been a really big tailwind for them because as people who need to send money back home are either unable or avoiding the sort of brick and mortar Western Union MoneyGram style, it sort of accelerated the shift over to the digital transmission of money. So Remitly's been a beneficiary of that because they've been sort of that digital first, mobile first approach to it. But actually, one of my favorite stories about Remitly is, I passed on their seed stage, or really their angel round. Then I passed on their seed stage. Each time telling them I really like what you're doing, but it's just too early for me. And then when their Series A came around, they actually saw me at an industry conference and pulled me aside and said, "Hey, we've actually got the amount of data that you need now to say, is this a real business or not, Caribou?" And we ended up investing based on that. So it's one of the sort of archetypical stories that I just love, where like, oh yeah, you actually can say no to a company and say, oh, you're too early, which is something VCs say all the time. And sometimes it's a euphemism, a nice way of saying, I don't really like your business. But in some cases, and this was one of them, it was really like, no, you're just too early for us, but I really like it. And then you actually eventually make the investment and it pans out really well. So that's one of my sort of favorite companies and favorite stories. But look, there's so much innovation happening now, and within various types of specific investment thesis. We just at the firm I'm with now, we just recently made an investment in a company called Rightfoot, which is basically enabling third parties to make payments to people's student debt. Right. So think the archetypical example of an employer wanting to make a payment to one of their employees' student debts. Right. That's actually great in concept, but really hard to make happen. There's a whole thesis around the API-ification of FinTech and especially InsurTech. And these things are happening. And a company like Rightfoot is building the machinery, building the APIs to enable that to happen. Right. So I think that that macro trend of API-ification, and then specific companies like Rightfoot that are making it happen, bringing it to life.
Story of where things are going in the future is something I want to dive into in just a minute. But before we do that, I thought first principles would be good to talk about. When it comes to looking at startups and the entrepreneurs that you're investing in, what are some of the first principles you apply in your work these days?
This is nothing new or non-obvious or profound, but always it starts with the quality of the entrepreneur and the team. Right? And that's kind of true at all stages of investing. If you're investing in late stage, that's still true because there's so much complexity to a late stage company. You need that quality of entrepreneur and management and CEO. It's also true of early stage for different reasons. At early stage, whatever the plan is, that something is going to disrupt the plan, and you need an entrepreneur who's able to navigate and dodge and weave, right, and reconfigure the plan to adapt. And look, we saw that 11 months ago, right? Boom, COVID hits, and some entrepreneurs are out there just sort of in denial. Some are paralyzed, but the better ones are like, okay, I understanding what's going on to the extent you can understand it. I understand the implications for my business, and I'm going to take action relatively quickly based on the information available, right? And I'm going to adjust my business model. I mean, I can think of one entrepreneur in my mind who literally had to completely shift his go-to market based on COVID, right? And so the quality of the entrepreneur, right, is what really drives the outcome first and foremost. Everyone knows that, but you got to start with that. I think that the yeah.
No, please go ahead if you wanted to add something.
Well, look, I think beyond that, then I like the notion of elegance, right? And this is something actually an entrepreneur whom I greatly respect sort of taught me the notion of elegance in a startup. You really have to look for a business that is going to be elegant. And what I mean by that is every stakeholder in the business does great when the business succeeds, right? And that may sound funny, like, hey, isn't every business elegant? But the answer is not necessarily, right? Sometimes businesses make a lot of sense for one customer type, but maybe aren't so good for one part of your supply chain, right? Like a really elegant business is actually great for every participant in what the business is doing. And so I think looking for a business that has an elegant business model that's actually bringing it to life in an elegant way, that's something to look for.
I noticed you mentioned COVID a couple of times, and that's a big trend that's impacted so much. But there's been a few other big trends. I mean, cryptocurrencies, Bitcoin in particular, has seen tons of adoption and price movements in the last few months. There's also been a lot of discussion around the industry with GameStop. I was wondering, what are some of the big trends that interest you and you're following at the moment?
Yeah, so I don't think I'm late to the party, but I'm not early to the party on SPACs. The special purpose acquisition corps are really interesting. It might be a sort of U.S. centric thing for the moment, at least, but it is just stunning what's going on there. I just saw that something like $25 billion came into SPACs in just January, right? And these are really interesting. Like, there's both great sensibility about why they make sense, why they should exist, right? It sort of decouples some of the sort of macro fundraising from the going public side of things. It also, in a little bit of a pattern matching, history does not repeat itself, but it does rhyme. I don't know if we're in 1998 or 2000, but it feels like we're sort of into that window where, I'm starting to watch and look for, does any SPAC actually see its share price go down when they announce an acquisition? If they only go up when there's an acquisition announced, then there's probably something going on to worry about. So I think that's interesting. And from the venture perspective, it's almost more from as the VC in the startup ecosystem rather than fintech per se. It's just very interesting to see how that's starting to play out, how it's going to play out. I mentioned APIs as another sort of macro trend, and I know APIs have been around in the banking world for a good decade. They're starting to really gain some traction in the InsurTech category, so I'm kind of keen on that as well.
Great. And what exactly is driving that adoption in the InsurTech side of things?
Look, InsurTech has been behind the banking side by 5 or 8 years. I think that's I don't think that's too controversial. I think even the insurance executives would say that. So part of it is just APIs. They make sense for the architecture. I mean, I think Amazon proved that more broadly. I think also APIs are crucial to unlocking the other technologies that are available to your business. So the more that you start to say, oh, well, this thing called the cloud, this thing like the smartphone, capabilities around machine learning, satellite data, right, ancillary data types, as these things become more and more impactful or potentially impactful for the insurance business, it becomes more and more crucial for the right architecture to be in place to be able to access these technology capabilities. And so in a sense, APIs are the fundamental answer to the question of how do I make sure my infrastructure can tap into this sort of massive wave of useful technologies to come to bear on my company.
APIs is something we talked a lot about last week, actually, with a gentleman named Sangeet Paul Chowdhury, and he's the global expert, or one of the global experts on the topic of platforms, and that's something I think you've done a lot of work on as well with the fintech community. Do you want to say a few words about platforms and why you're such a believer?
Yeah, look, I'll, there's sort of a few different layers of platforms, right? There's companies as a platform, and I think the question is, when you're building a company, do you want to be, the application that solves a use case, or do you want to be the enabler that lets other companies solve their use cases? You can capture more of the rent if you're the actual, application solving the use case. But if you're the platform doing it, what it opens up is other people's assets and other people's insights, right, into solving problems. Right? If I'm just if I'm the capability, the platform for doing X, and to really make that useful, you also need to bring Y into the mix. Right? Y might be a complementary data set. It might be a complementary analytic capability. It might be a complementary set of customer relationships. Let the people who have Y, right, access your platform X, and they will create a better application for that use case than you ever could. Let another company who has some complementary capability or asset Z do the same, right? And so on and so forth. And eventually you can get the whole alphabet covered, and you can be the platform, right, bringing X to that whole alphabet, right? That is, incredibly value add, and ends up being very sticky and high value for the company itself, compared to trying to be the one that I have X and I'm going to try to assimilate Y. I have X, I'm going to try to assimilate Z. Right? Yeah, Apple has a few apps of its own, but part of why Apple is so valuable is because actually they built a platform, right, where you can take our smartphone and you build your software with your capabilities on top of our smartphone platform. There's also another level of thing about platform, which is just like whole, computing shifts and computing platform shifts. The shift from the mini computer to the PC to the web to the smartphone. And I would actually argue that COVID is itself another platform shift at that sort of macro level. But my wife and son make fun of me when I start arguing for that. So we'll see.
You have to tread lightly when you're talking about these big topics like COVID and change and systems and all that. You can sound a little bit wild, or we all can. But speaking of shifts and COVID, something else that we've all experienced is the shift in our working lives. And that, I think, is something that also connects to fintech. And I think you'd be a good person to say a few words on that. What's your perspective on the future of work and that connection?
Yeah. So I love that question. I love that topic. One of the conferences that I've helped launch is called HR Transform, and we've been around for a couple of years now. It's focused on the impact of technology on the workplace, which has gotten a heightened level of interest, of course, in the last 12 months. And that actually led to my joining this other firm, SemperVirens, right, which is focused really on startups that are selling to or through the employer channel. When it comes to, that the employer channel covers a lot of different spaces. It includes, all the workforce tech, like Zoom and Slack as examples. It includes a whole bunch of the sort of healthcare tech, right? Think about digital therapeutics. Think about mental health for employees, right, provided by the employer, and some of the new digital solutions to provide that in today's world. But it also includes a part of the FinTech and InsurTech category, right? So, there's a subset where the product actually makes most sense from both a distribution channel and actually from a product design perspective when it is sold through the employer, right? Think about the employer. The employer has a degree of sort of trust with its employees, varying degrees. It has tremendously relevant data about its employees. And some of that data is, the economic data around payroll, right? It also actually has like a flow of funds that is happening through the employer when it comes to payroll. The financial services and insurance products that could and should be sold through the employer channel, it's really interesting when startups begin to point their guns at that opportunity, right? And then when they start to figure out, okay, now what does it take to sell our FinTech product through the employer channel, right? Earned wage access is one of the, more interesting, and in a sense more straightforward, that it's a natural fit with the employer channel, because earned wage access only makes sense when sold through the employer channel, and that's a space which is getting really interesting, if not overcrowded.
Something that popped up in what you just mentioned there was the whole topic of mental health, and I think it's an interesting space, not only in the workforce right now because of the impacts of COVID and increasing stress levels in general, but I'm always fascinated how it impacts the entrepreneurial journey, because you need to be a little bit crazy to go out and be an entrepreneur, and of course it's a very stressful life that you need to be able to remain resilient through. Do you see any particular opportunity or need there to do more to support entrepreneurs, or how FinTech can solve some of the particular challenges in, let's say, the gig economy as things shift?
Really two very different questions, if I may. The question around the supporting the mental health for the entrepreneurs. I had an entrepreneur that I'm involved with tell me a few months ago, yeah, look, I have to manage my depression, right? And look, what can I do, right, to help that person with that? I'm actually going to claim, look, there's great limits to what I can do. I can let him know that, that's okay. Like, that doesn't, from my perspective as an investor, it does not disqualify him to be an amazing entrepreneur and CEO, right? And in fact, the fact that he is self-aware and willing to be transparent about it, as like, yeah, this is a struggle I have, I actually think accrues to that person's credit as an entrepreneur. But look, there's startups, as I think I said, that are aiming to help provide mental health benefits. Like, we're actually invested in a company called Spring Health, which does exactly that. So maybe that's the kind of thing also that entrepreneurs can do, both for their employees, but also for themselves, right? Make sure, because they're employees too. But look, then there's the other question you're really asking, which is around the interlink between mental health and financial wellness, right? And I think there's been a heightening awareness around this notion of financial wellness as one of the, whether it's an employee benefit, trying to ensure that through the employer channel, the employee base is getting access to financial wellness tools. The gig economy, there's certainly interesting companies that are trying to serve the gig and freelance economy, and part of it's just ensuring their income. Although actually, looking at there's a really interesting company I've chatted with recently called Keeper Tax, which is actually not about your income, but it's about your deductions, right? If you're a freelance worker, maybe if it's just a moonlighting, a side gig, not your primary job. So you might get your W-2 forms every year from your full-time employer, but you still get some tax forms from your gig work. What's deductible, right? If I'm an Airbnb host, can I deduct the Netflix subscription that's serving that lodging. Like there's all sorts of sort of new problems that fintech startups can help the freelance economy to solve, and to solve with much less sort of pain and suffering and friction. I think that's an interesting area.
Absolutely. I wanted to ask you, we haven't talked a huge amount about your new fund and how that's maybe changing. I wanted to ask you, though, about venture capital itself and how that's evolving through COVID and beyond that. In recent years, there's been a lot of talk about the model and how it could be improved, and I thought you might have some views on that.
Yeah. So, it's interesting. I feel like, at least a dozen years ago, I got to be, maybe with some accident and luck, on the forefront of where venture capital was going. So at QED, we were, I always like to say, operators masquerading as investors. We all came from the Capital One actually building and growing and running stuff. And, we learned a few hard lessons in VC sort of along the way by doing it. But I actually think the notion of, VC that is led and spearheaded by operators, right? Folks who come up through the ranks of being an operator rather than through the sort of financial engineering or investment banking route has become much more commonplace. I think also the specialization, right? When you assert we're going to be value add, right? I think that usually, not always, but usually begs a degree of specialization in what you do for how you're going to add value, right? So I think that trend has proven out. I think that trend has continued. I like to think that SemperVirens resembles that as well. Very much sort of able to help entrepreneurs navigate the employer channel, and that's sort of the specialization for what we're doing. Look, I think there's an impact of COVID. Obviously, COVID has been a terrible, terrible thing for many businesses, for many people. Some of my business endeavors have gotten hurt from it too. But as a guy who lives in Richmond, Virginia, right, with an airport that I like to joke, flies approximately nowhere, the norms around being in person versus the ability to transact and engage by video have clearly changed. And I think that actually increases the competition for and by capital, where this guy in Richmond, Virginia, right, can be just as useful and just as engaged with a startup in New York or Chicago or San Francisco as someone who's in New York or Chicago or San Francisco. So I think it's sort of leveled the playing field a little bit, and the same is also true if you're an entrepreneur in Richmond. That maybe you can now raise money a little bit more easily from someone who's in the Valley, rather than having to necessarily, pull up and move your company to the Valley. And then lastly, I'm curious about where SPACs go in terms of the impact on particularly late stage. I was just thinking recently and talking with someone about, if you're an entrepreneur, you've got a very successful company, you're thinking about taking your Series D or Series E, raise $100 million from this excellent PE firm at $1 billion valuation, or maybe I take $300 million at $1.5 billion valuation from the SPAC, right? Like, yeah, SPACs are going to be real competition for the big PE firms, I think. So, I think that's going to have sort of echoes down through the earlier stage VC ecosystem as well over time. Fascinating stuff. It's a time of incredible change, and we have to wait to see some of this dust settle. While we do that, I think a lot of people are also reconnecting with their more personal life, their day-to-day opportunities to stay grounded with all this change and innovation. I was curious, before we get some of your final thoughts, where do you seek inspiration outside of work or also find grounding in life? Yeah. So I mentioned my wife and my two sons. They certainly keep me grounded, very appropriately and thankfully so. During the warm months, I take sort of irrational pleasure in going crabbing in the Chesapeake Bay. I don't know why I enjoy that so much, but you put a piece of chicken wing on a string and put that on a PVC pipe pole and put that in the ground in the water 50 feet out, and you take your net out every 5 minutes and you walk out there and you hope you got a crab on the other end. There's something I find very satisfying about that. I try to read real books. every now and then, or at least real sci-fi books. I just finished up the 3 Body Problem series. And what a dense series it is, but what a compelling series it is. So original. So try to do a little reading here and there where I can.
Great. It's funny. I come from Canada originally, and they have this strange tradition of ice fishing, which is a little bit, it sounds like going crabbing, but colder.
Yeah, that seems a lot more uncomfortable than crabbing during the warm months, at least.
Yeah, and it doesn't work so well if there's no ice. You fall right through. So it has its dangers as well. Caribou, we covered a lot of ground, and I wanted to give you a bit of a wild card option. Are there any final thoughts you'd like to leave with our audience before we let you go?
Well, look, I like to talk with people about sort of careers and first acts, second acts, third acts. My real vanity, my real claim to fame is that if you Google stupid career decision, I am the #1 result. I kid you not. And, look, I've been trying to not fall victim to inertia. It would have been easy to stay at Capital One. It would have been easy to stay at QED. It would have been easy to, sit on the beach a bit and do some extra crabbing. All I can say is, as a guy who's, been fortunate to do interesting things and hopefully have an impact in a few industries, is, boy, I just love getting to follow my passions and, go back to first principles, avoid inertia, and, try to make my little dent in the universe. So I'd like to encourage people to do that too.
Great advice, Caribou, and looking forward to seeing everything that you've got new coming out this year. So we'll stay in touch with that, and I'll put the links in the description. Thank you again for taking the time to join us today, and I hope we get a chance to catch up in a few months to hear about all the developments on your side. So thanks.
Well, I appreciate it, John. Thank you.
Ciao, ciao.